Welcome, mobile traders. This is Mobile Stocks, the platform that teaches and promotes people with full-time lives how to part-time trade, invest in the stock market. I'm the instructor, Brantley LC. If today's video is going to be an example video of my reading charts video, I suggested if you didn't see that, it's very important that you watch that first to understand what this example is about. Without further ado, let's get into it. I want to use Walmart for my example, and I'm going to go over each step that I spoke about in the video. It was 8 steps total. So let's go over the 8 steps right now. Step 1 is to pick a stock, pick a ETF, pick a chart with a clear up or down trend. As you can see, my ticker that I'm going with, my stock is Walmart, WMT. You can see as of recently, it's been uptrending. Very clear that it's been uptrending. You can draw a trend line like I did, this blue line. It's been going up, bouncing off the trend line, and it's been coming up nicely. So that's a clear identification of my step 1. Step 2 is to pick a line leader of that stock. So Walmart, fortunately, is in line leader already of the sector. Walmart, as you know, is in a retail space. Walmart, along with the giant of like Target, which is TGT, department stores, and Walmart really doesn't have too many competitors because Walmart is Walmart. Walmart is known across the globe. Everybody knows Walmart. Walmart has a competition going on with Amazon in the digital space right now, but as far as like the physical and everything, Walmart and Target, and I mean, if you want to talk about stores like maybe Ross and I guess Home Goods, they don't really even compare to Walmart. So Walmart is a line leader in this, for this example. So now that we identified, a clear trend, which is step 1, the line leader of this sector, Walmart is a clear line leader. You want to identify if Walmart is moving as a unit or is it moving solo compared to the other stocks in this sector, stocks or ETFs in this sector. So if I get up this box right quick, I scroll down. Okay, we see that, like I said, Walmart is in a retail space. If I click that, okay, Webull provides a clear picture of it. 14 is green, 11 is red. That 14 represents the stocks that actually went up for that day. The 11 represents stocks that went down for that day, and that was Friday, the last trading day. So you can see 14 and 11 is pretty half and half, almost. Yeah, you can go down and you can see the space, the different stocks that share that same space. You can also go over here to this next one, food and drug retailing, and yeah, 16 to 16. That's literally half. So you can see half of it's going up, half of it may be going down. And even if you click on something that's going down, let's just click on Cisco. It was red that day, but it's still in the uptrend, as you can see. So that really doesn't count. It was only down by 0.22, like these 0.2, 0.6, like these are all down days. Very small down days. Actually, good days to get in. Very good days to get in. We can see Walmart was on a red day too that day. So it's good to click on a lot of these stocks and see uptrend, uptrend, uptrend. Almost every single one of these stocks, even the ones that's in the green, uptrend. So you can see that Walmart is dealing in a retail space. A lot of these retail stocks are on an uptrend. So that's good. You can see this moving as a unit. If it was moving solo, Walmart would be, either green or red. And the other stocks in that sector would be, green or red. It'd be the opposite of Walmart, but it'd be bunched in So you'll have about, I don't know, 10 green stocks, and Walmart is the only red stock, or vice versa. So you can see that Walmart is moving as a unit, which is good. That lets me know that the retail space is going up. Right? Next, you want to identify average volume versus the current value. So if I look at Webull average volume right here, it measures 3 months. The average volume of Webull is 9.41. The current volume Friday was 8.83. So I want to look at the chart and I want to identify one of the last power moves it made. So remember, I said the average volume is at about 10 million at 9 point something, right? Was it 9 point something? Just to make sure real quick. Yep, 9.41. Let's just say 10 million. The average volume is at 10 million. If I look at this right here, this is before earnings. Before earnings, it was around average. You look at this at the top, you see that 32.18. That's a lot. That's about, what, 2-3 times more in volume than the average volume. So that's a power move. That's a very strong power move to the downside, right? So I identified the power move and I identified the volume. So volume and power moves are hand in hand. So you want to make sure that if you see something gap up, you see something gap down, which right here is a gap down, it has volume behind it that makes it a power move. You want to make sure that the volume is 2-3 times, 4 times, 5 times. You want to make sure that it's a lot more than the average volume. That lets you know a lot of selling of buying was going on that day, a lot of trading activity. After that, you want to see consolidation at low volume. And I'm going to show you what I mean by that. So you see it went down, heavy volume. Volume was still heavy going all the way down. Volume was heavy going all the way down to, let's see, 13, 10. And then to like right here. And then it started to become average volume again. And then it started to pick back up, 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 pick back up. So you can see that volume was heavy on the downside. It remained heavy, but not as heavy on the upside. And now you can see it's kind of consolidating on an uptrend with smaller volume going up. Smaller volume going up. Especially on these 2 days. Smaller volume going up. Volume started to get a little heavy again. A little heavy, small volume going up. Which gives us a great chance to get in on a red day. I always say you want to buy calls on a red day if you can. Buy puts on a green day if you can. Next, you want to identify supply and demand, support and resistance zones. And this line right here, where I have the word possible breakout, is a nice support zone, support line, and a nice resistant line at the same time. You can go all the way back to around September of 01. You can see that this line right here was being tested a lot. On a resistant level, it broke it, came up, it became support, then it started becoming resistance, and then became support, kind of teeter-tottered around the line. And you can see since 2001, this has been a strong support and resistant line. So that's why I got that line right there. And you can see that right now is a resistant line. So if it breaks this line at about 140.66, which the high that day, it broke it at 140.69, price will come down and test that 140 level and see if it's at support before it goes up. And you can see that it's forming a nice wedge triangle right here. Right here. So I'm expecting on the upside, more than the downside, this stock will go up. The next thing I talk about MA lines, you want to make sure, MA lines to me, I use MA lines Not as much as the average trader. I just like looking at my own lines that I draw myself. But just for the purpose of this, I'm gonna see if my phone let me do it. It's been acting funny. See if I can show you my MA lines. So if you see right here, oh, it showed up for a minute. Yeah, my phone acting funny. It's gonna do it again. So if I just put my MA lines in place right quick, you can see that Walmart is past most of my MA lines. And right here, it was at my 100 MA line. They saying that that's going to be like my next resistance at 141.44 would be my next resistance. I apologize for my phone. It's been doing that. I think my Weibo acting crazy, but if I draw my MA lines, you can see that my next MA line, which is that green one at the very top, will be the next one that's holding us up, and that's at 141.44. Alright, so after that, you want to look at the probability for the upside and the downside. You want to use ATR. ATR is average true range. Basically, it measures how liquid the stock, the ETF, the security has been in that day, in that week, whatever you set it for. So if I go down, my ATR, you see how it has ATR 5? So in 5 days, you can see that Walmart has been going, giving us $1, $2, $1. Walmart is a very slow-moving stock. So basically, that's what the ATR lets me know, how fast the stock moves. It gives me an idea of how long do I want to buy a contract for. So knowing that Walmart is a very slow-moving stock, if I go out of Walmart, I go weekly. Let me see. I do my ATR. So in a week, as of recently, Walmart been giving me about $5 a week. You know what I mean? So that's about $1, roughly $1 and something a day, which is a very slow-moving stock. So if I want to buy a contract on it, I want to make sure that I want to buy a contract that's probably in the money so it can have some intrinsic value versus some extrinsic value. And I want to make sure that I buy a contract that's further out with the expiration date. It's just a way that I strategize when I'm about to enter into a contract. I look at the ATR and I want to calculate the probability. So looking at Walmart only giving us, I'm gonna say $5, so $1 a day. I should say $1 a day. I'm gonna look at what's the probability if I get a Walmart right now at the close of 140 that I can get up to about right here, at least right here, when you can start seeing Walmart start to sell off at 147. So $7. So on the upside of Walmart, I'm looking at $7. On the downside of Walmart, if Walmart was to fall again, I can see right here is a strong support level for Walmart based off of, let me draw this right here, this trend line right here, just to give you an idea what I'm looking at, since I'm using my phone. All right, so you can see right here, it's more upside than downside, right? So if price at 140 right now, and if I think Walmart can fall, let's just bring it down even further to right here. And the bottom of this is about 134. So 134, 35, 36, 37, 38, 39, 40. $6. So $6 going down, $7 going up. is what I'm, looking at. So it's kind of 50-50 for me right now on my probability. I can probably get the same as I can if it's going up than I can if it's going down at the moment. So that plays into strategy. Like I said, if I want to buy something that's more in the money, out of the money, at the money, it's all about strategy when you look at that. It's not a good or bad thing. It's just you want to plan an entry and an exit. Like I said, right here, this red mark is where I would exit at if it's not going in my way. This blue line up here is what I think I can make. So at the least, I think I can make $7 out of it. But it went up to 153, and everything is going up right now. So it's possible I can make $7, $8, $9, $10. So it's more upside to me than it is downside, because if it goes on the downside, if it gets at that level, I'm going to sell at that level. So if it gets below, if I buy it at 140 and it goes to, like I said, 134, I lost $6, I sell. If it goes up to my $7, 147, I hold until I start seeing a lot of selling, because it could possibly go up to 140, give me $8, $9, $10. It could possibly go up to 153 at the highest. So it's more probability for me as a trader that if it goes up, I can profit than it is if it goes down. So that'll be my entry and that'll be my exit. My exit will be up here in the supply zone. My exit will be right here if it was to go down in my favor on this support line. And this would be my entry right here. I already entered in the stock, but my entry was about right here when it touched down. So I'm going to hold on to it. So that right there is a quick example of my 8 steps on how to find a stock.